Good evening, I'm Slade Smith, and this is your daily from Sound Money Digest, where smart money never sleeps. From Wall Street whispers to crypto convulsions, we break down the moves of the markets and the motives behind them. No fluff, just facts that matter. Let's get into it. Good evening, folks. Slade Smith here with your end-of-day market wrap for March 25th. Equities, modest gains amid consumer concerns. S&P 500 closed at 5,767.57, up 1.8%. Dow Jones Industrial Average inched up 0.1% to 42,583.32. Nasdaq Composite rose 0.5%, finishing at 14,108.82. These gains come despite a sharp drop in consumer confidence, with the index falling to 92.9 in March, a potential recession signal. Gold, holding strong. Above $3,000? Gold closed at $3,020.51 per ounce, reflecting ongoing investor interest in safe haven assets amid economic uncertainties. When confidence wanes, gold remains a trusted refuge. Cryptocurrency market, stability amid volatility. Bitcoin, BTC, trading at $88,008 with an intraday high of $88,525 and a low of $86,330. Ethereum, ETH, priced at $2,071.40, reaching a high of $2,094.95 and a low of $2,039.76 during the day. XRP holding at $2.46, with an intraday high of $2.47 and a low of $2.41. The crypto market shows resilience, maintaining stability amid broader economic fluctuations. That's your market snapshot. Gold is holding firm above $3,000 an ounce, up 0.64% today, as the cracks in U.S. consumer confidence deepen. The Conference Board's latest report shows a sharp drop in the Consumer Confidence Index down to 92.9 from last month's 100. Economists were only expecting a minor slip to 94.2, but consumers had something else to say. Expectations for the future? The index fell to 65.2, the lowest level in 12 years, a reading that's historically flagged an oncoming recession. Stephanie Guichard, senior economist at the Conference Board, didn't mince words. Confidence about future employment has hit a 12-year low, and optimism about income has largely vanished. Add to that rising inflation expectations, more Americans bracing for higher interest rates, and gold starts looking less like a hedge and more like an anchor. When the people get nervous, smart money moves to gold and stays there. The IMF's quiet CBDC agenda. While most headlines are focused on interest rates and inflation, the IMF has been moving in silence, testing a cross-border payment system using CBDCs. The platform is called XC, and it's designed to settle transactions between nations in real time, without using traditional banking rails. Now here's the part nobody's talking about. This architecture looks and functions a lot like what Ripple and XRP were designed to do over a decade ago. But this version, it's centralized, quiet, closed door, coordinated through global institutions like the IMF, not transparent public ledgers. The stated goal is efficiency, but the real move is control. As the IMF pushes forward with these digital settlements, you won't hear much from your elected officials, because it's not up for debate. Crypto whales are back, and they're buying heavy. While retail traders flip coins and influencers chase trends, the real money's moving, and it's moving big. Bitcoin. Let's start with Bitcoin. MicroStrategy just added nearly 7,000 BTC, $584 million worth, bringing their total to over 500,000 coins. That's a $44 billion stash. Meanwhile, a dormant whale wallet, quiet since 2016, just woke up and moved 3,000 BTC. And another private whale scooped up 2,400 BTC this week, signaling a wave of strategic reaccumulation. Ethereum. Over the last 72 hours, Ethereum whales have pulled in 120,000 ETH, about $236 million. More importantly, 1.2 million ETH has been withdrawn from exchanges over the last 48 days. That's less selling pressure and more long-term conviction. Altcoins. And this isn't just about BTC and ETH. Whales are quietly loading up on altcoins. Litecoin whale wallets grew by 16 accounts holding 10,000 to 100,000 LTC. Uniswap, UNI, saw a 3,900% spike in whale net flow. Massive accumulation. ONDO, is getting picked off the board too, with momentum aiming towards 0.95. Even newer protocols like virtuals are seeing sharp whale inflows. Whales don't follow the hype. They front-run the future. And if you're watching closely, they're laying out the next cycle piece by piece. CBDCs, innovation or infiltration? Governments call them innovation. Central banks call them stability. But behind the curtain, CBDCs, central bank digital currencies, might just be the slickest power grab in modern history. This is Slade Smith, and tonight, I'm pulling back the velvet rope on the digital money you didn't ask for. But they're building anyway. Let's name names. The European Central Bank wants a digital euro, not to help you, but to cut out Visa, MasterCard, and anyone they don't control. The Bank of England is testing the digital pound, while side-eyeing every crypto protocol it can't regulate. The Bank for International Settlements, think of it as the central bank of central banks, is running experiments like mBridge, a platform that lets nations settle cross-border payments using their new, shiny CBDCs. And don't let the silence fool you. Private firms like Accenture and Consensus are powering the rails in the background, embedding themselves into the heart of this shift. They'll say it's about inclusion, efficiency, saving the planet. But let's be honest, this isn't just about digital money. It's about programmable money. Currency with expiration dates. Money you can only spend on approved goods. A framework where they get to decide how you use your funds. That's not finance. That's digital governance. Here's where it gets interesting. The UK public dropped over 50,000 comments on the Bank of England's CBDC proposal, and most of them were skeptical, if not outright hostile. In the US, President Trump banned federal agencies from launching a CBDC, and now Senator Mike Lee is trying to make that ban permanent. Ron DeSantis and a wave of conservative lawmakers are lining up to block FedNow or any future federal digital dollar. Globally, Nigeria rolled out its e-Naira, and the people simply didn't use it. That tells you everything. You can build it, but you can't force trust. Here's where it gets interesting. The UK public dropped over 50,000 comments on the Bank of England's CBDC proposal, and most of them were skeptical, if not outright hostile. In the US, President Trump banned federal agencies from launching a CBDC, and now Senator Mike Lee is trying to make that ban permanent. Ron DeSantis and a wave of conservative lawmakers are lining up to block FedNow or any future federal digital dollar. Globally, Nigeria rolled out its e-Naira, and the people simply didn't use it. That tells you everything. You can build it, but you can't force trust. Maybe. But in my world, we call it coordination. The IMF, the BIS, and the World Economic Forum have all said, openly, they want a globally unified digital monetary system. Laws are being written. Infrastructure is quietly rolling out. You won't get a vote. You'll just wake up one day, and it'll be here. This isn't innovation. It's integration of your wallet, your behavior, your freedom. And if we don't ask the right questions now, the answers will be programmed for us. That's all from me, Slade Smith, signing off from Sound Money Digest. Remember, in this new financial era, information is leverage. Use it wisely, and we'll see you tomorrow.